Chris up, and let's go ahead and get started. All right, family members. Now, as you know, we went over in great detail Monday, once again, the economic calendar report, and we went over those things that would get you PAID from the economic calendar report, went over what strategies to implement and how long to implement those strategies to ensure that you get PAID. But before we go ahead and monitor the activity up to this particular point, Brittany, Queen Patsy, let's go ahead and take a look at the indicators and see if there's anything wrong. Okay? All three indexes are down. All right? Greetings, King Garnell. Okay, be safe out there while you're driving. All right? So we see right here, all three indicators are down, right? S&P down 0.20%. Dow down more than 49 points. NASDAQ down 0.38%. Crude oil moving down slightly. Gold moving up. Okay? Stock market down. Gold tends to what? Move up. That's correct. All right? Silver may or may not move up, but when the economy is doing good, silver does well because silver is used in manufacturing and industrial application. Bond is down, but the three major indexes are up. There you go, Mike. This should be up. Oh, and by the way, what else is wrong on this page? You got to see this now. There you go, Jillian. There you go, Mike. Come on, everybody. There you go, Patsy. What else is on this page wrong? That's right. This VIX should be up. See, every morning, family members, when you come and look at the markets, you got to scan like this and look at this. And this is why we are still for the first 30 minutes. Now, this may turn around and be positive like it should be within the next 30 minutes when the market settles. This may turn around and be positive like it should be because the three major indexes are down. But right now, you see, if you were premature in your activities and you saw this as soon as the market opened and you jumped in with a put here or a put here, no, that's not necessarily what you need to do. That's why you need to buy a ticket and a bag of popcorn for the first 30 minutes that the market's open and let the market settle. So I just wanted to show you this as a case in point, okay? As we go on through, we see the US dollar against the Japanese yen, Bitcoin, FTSE, Nike, all right? But just wanted to show you these few things, all right? Because it's always important for you to scan the market the first thing. Now, if you know you're going to trade in the market on any given day, you'd be well advised to look at the major indexes in pre-market activity about, 15 minutes before the market opens, okay, just to see how it's trending pre-market. Then as soon as the market opens, check those indicators to see if the indexes continue to move in the same direction that they were pre-market, all right? So it's very important that you monitor these types of things, all right? See, that VIX should not be sitting down, okay? And these treasuries should not be sitting down because these three are down. All right, everybody pick up on that? Everybody got that? Okay, all right, good. It's very important that we go over this over and over and over again so that it becomes secondary in nature when you look at the market indexes. Okay, now, let's have some fun. Okay, now notice how I launch off of our homepage here. Okay, I come right down here to Econoday. And we spend a lot of time Monday on what economic calendar reports that were going to be released this week that we would be able to actualize and or monetize. Greetings, King Anthony. Okay, so now let's scroll down. We're going to look at the global announcements. Let's start with Monday. You remember there wasn't really anything out here Monday except for right here. These two. Okay? And we brought to everyone's attention because of the time differential. Pay attention to when they were going to be released. 9:30 p.m. Monday night, which means you would take the position Tuesday morning. Everybody with me so far? Okay, now if you're not, come on, ask questions. That's why we're here now. Ask questions if you not following me. Okay, everybody's clear. Now, when Tuesday rolled around, Tuesday morning, what two positions were we supposed to be looking at? What two positions were we supposed to be looking at that will allow us to actualize and monetize these two reports released the night before at 9:30? Okay. Thank you, Claudetta. Thank you, Devon. Thank you, Queen Zenobi. Okay, here they go. First position is this. Now, I'm about to show you something real time now. For all of you that were in Monday's virtual trader room, you will bear witness to the fact of what I'm about to show you. All right, now watch this. FXI was one of the positions. Now, I want to show you. You see FXI is down right now. This, once again, is evidently wrong. It can't be down here at 9:42, and that's the correct time, but show it running up right here. Okay, that's today. So that can't be right. So once again, because you're trained, you see this, and you know this is wrong. But now, what we want to do is see what it did yesterday, because the report from China was released on, once again, Monday at 9:30. So we actualized and or monetized FXI the first thing the next day to get out by 4 o'clock. Well, let me back up. What type of positions are these? Do we go to sleep in these positions, or do we get in and out during the same day as they are intraday? There you go, Zenobi. There you go, Mike. They're intraday. So there you go, Christopher. There you go, Ezekiel. And you're going to see why we hit and get on these positions as intraday positions. We're not in the positions after 4 o'clock. Okay? Watch this. Tuesday. All right? Let's go to the 5-day. Watch now. What happened after Monday? Monday night, the report was released. What did the position do? Because it was positive, what did it do? It went straight up. Didn't we indicate to you Monday that if the numbers come out and they were up, that FXI would rise? Did we not tell you that? Okay. Did we not tell you and show you how to go ahead, and if the position rises upon completion of your drill down, you take the appropriate call, right? And if it's a call, when you get the water table at 11:15 on Tuesday, what do you do with your trail stops? Do you leave them wide or do you tighten them? There you go, Devon. You tighten them. There you go, Jillian. Okay. And you are out of the position. You monetize the position by 4 p.m. that same day, Tuesday, right? Okay. Now, watch. You see the position is moving down now. You see the position is down. If you would have stayed in the position and not traded it like an intraday trade, you would be losing money. Now, let's go back. Off the 5-day, right here, the position is trading at what? First thing Tuesday morning, okay? As it runs up, let's come back. We take our positions at what time? After the first 30 minutes, we let the position what? Settle. We let the market settle, right? By a ticket in the bag of popcorn. So that means if the position was trading, look at the screen. at 10 a.m., market opens at 9:30, you would have been looking at a $40.50 call. Watch this. You come out, you index off the 18th, the third Friday of the month, okay? You would have been sitting right here at 40.50, not at 41. This was yesterday. You would have taken a 40.50 for the intraday call. Watch this now. On the 40.50 intraday call, okay? The strike price at 40.50. I hate when they give us this kind of chart because it's hard for me to show you. All right. And see, now it's giving me today. I don't want today's. I want yesterday's. Crap. Hold on. Let me see if I can fool it. There we go. Okay, I fooled it. Okay, now, you see this position, the 40.50 call? Today is down 0.91%. But watch this. Let me go to the 5-day, which would include yesterday, right? Okay, watch this now. Come on, the chart's not available. Because what I was going to show you, and you can go directly to your trading platform, the position yesterday when we bought it was at 88 cents. It went up to $1.19 intraday. We made 35.50% in less than 6.5 hours, utilizing our strategy, just like I described it to you and showed you on Monday. Does anybody not get that? This is today. See, it's locked in. And for some reason, it's not showing me the chart, because if it would show me the 5-day, I could go back and show it to you. But let me pause. Is that not proof positive of what I'm talking about? And it also goes even further. Thank you for the kind comments. It also goes even further. If you were hard-headed and say, well, I'm up 35.50%. This was yesterday. So I'm going to let it stay in. I'm going to stay in the position until today. Well, look what would happen. Your position would be down 90.91%, which would have eradicated your 35.50% profit. King Patsy says she went to her platform and she said, yes, it is. I can see it on my platform. Thank you, Queen. Now let's pause now, because you got some more economic calendar reports that are going to be released this week. I'm going to go over them with you, and I'm going to go over the positions that you need to be actualized and monetized, and just like I showed you on this one. Now, please, I implore you, if you do not understand and understand anything I just went over, and also what I went over Monday, how I turned it into money, okay, in less than 24 hours on Tuesday, let's discuss what you're not getting. It's not your fault if you don't understand and understand. It's my fault. I have to explain it to you in a manner such that you get it. So, does anybody not see how I looked at the position, how I analyzed the position, how I walked down the position, how I went in, implement the strategy, subsequent to my drill down, took my position, adjusted my trailing stop because I had a call, and went ahead and monetized before 4 o'clock that day, getting 35.50% profit, taking the position down at $88 per contract, selling it at $119 per contract. You pull out the calculator, you do the math, there's 35.50% profit before 4 p.m. Eastern Standard Time in that very same day. This is not difficult. Now, the other position, check this out. MCHI, it rose even higher. It went up 101.19% yesterday. And it too today is down. So once again, an intraday position yesterday would have been applicable, and you would have had more than 35.50% profit that we received on FXI, because this position went up 1.19% yesterday. Let me go to the 5-day on this one and see if I can find it for you. I want to go to options, watch. Now on this one, the $58 call was applicable. And let me see what we got right here. Please give me a chart. I don't know what's wrong with Yahoo Finance. The charts are down. But I would have been able to show you that this one went up 1.19%, yielding a higher profit than the FXI. This is super easy. And if you want to become wealthy trading and investing, these are the strategies and techniques that you have to master. And once you master them, there ain't no looking back. Any day this market's open, you'll be able to get PAID. And look, your template, your roadmap is the economic calendar. It comes out every single week, tells you what the particular calendar report is going to be, gives you the index numbers, and all you have to do is go back to our arsenal. I asked what's to the arsenal, pull out the appropriate weapon, i.e. strategy and technique, and monetize it intraday. So we're clear on the who, what, why, and whys of how we monetize these two positions. And you need to ask yourself, where else do you learn how to make 30% profit in a day? Some people don't make that on positions in a year. So if you do this and you're popping these kind of profits, okay, PAID, profits and income daily across numerous positions, do you know how much money you're going to generate from your portfolio per year? As I say, if, for instance, if a hedge fund manager or institutional investor made 35% per year on his whole darn portfolio, he'd be on the front page of Time magazine. He'd be on the cover. That's crazy. Here you are, you're picking out individual positions with laser focus and getting paid 35.50% profit in a day. Now, let me tell you, for instance, let me give you scale with regards to this. Let me give you scale. If you bought one contract on that FXI, it cost you $88. And by 4 o'clock that same day, you had $119. You had to back out your brokerage fees, quite naturally, okay, on all this. But let's say you bought 10 contracts, then that would have been cost you $888. But you would have made, okay, you ready? $1,119. And then you keep going on exponentially. This is how you become wealthy, family, not becoming rich. All right? Because let me say something to you. There's an old saying that says, if you want to become rich, you wish upon a star. Once again, if you have aspirations of becoming rich, you wish upon a star. So you go out and buy a lottery ticket, or you go to the racetrack and you race on you bet on horses, or you go to Vegas and you hope that you hit it big. So you wishing to be rich. But if you want to become wealthy, you strategize to monetize. Once again, if you want to become wealthy, okay, not wish, you want to become wealthy, you strategize to monetize. That's this old saying on Wall Street. The wealthy don't wish for a damn thing. They plot, plan, strategize, then they monetize. Do y'all get that? That's very, very important, okay? And that needs to sink in now, okay? Wealthy strategize to monetize, okay? Excellent, excellent. All right. Now, let's go. Once again, I want to rehash for those of you that did not take advantage of the plethora of information we gave you right here on Monday to get PAID from these two reports. I want to walk down the rest of the week. All right. So now let's go to Wednesday. All right. Now, how are we positioned to monetize these two? What position? Okay. There's the position. Hold on, I'm in the wrong space. Oh, sorry. Here's the position. Okay. We told you this on Monday now. Like I said, I'll always give you information so you can verify. Trust but verify. Okay, now watch this. All right. Now, this position is down. See that? It's down. Now watch this now. These reports were released 4:30 this morning. Right? We wait the first 30 minutes to let the market settle. Right? Then we do our drill down and take the appropriate actions and or position. Now watch this. If this report came out at 4:30, the numbers should be up. Okay? Now watch now. Is this number higher or lower than that number? Lower. You see it? It was released at 4:30 this morning. It's telling you this number, the actual number, came out lower than this one number. Is this number higher or lower than this number? Lower. See it? Family, look, pay attention. You're not going to find this anywhere else on the planet that I'm showing you. Easy money. Now, we told you Monday, if the numbers that come out at 4:30 in the morning before our market opens at 9:30 are lower than these numbers, which you saw on Monday, then EWU will be down. Is EWU up or down? Do you see it on the screen? It's down. Does it get any simpler than this? There you go, Queen Shauna. No. Did we tell you this was going to happen on Monday? Yes. Now, the next thing, is this 0.50? Yes or no? There you go, Devon. There you go, Anthony. There you go, Claudetta. There you go, Shauna. No. That's 0.16. Now, you jump out of here, Billy Badass, if you want to, and you say, well, you know, this is still down, so I'm going to go ahead and take a put. Let me tell you why that won't work. Because if you come over here and you index off the next highest number, hold 1 second, because it's a put. On a put, you index off the next highest number. If it's a call, you index at or above. Hold 1 second. I love being in here with you real time because I can show you. There you go, Anthony. That's what I'm about to show them. All right. Watch this now. Now it's at 0.60. You come over here to options, right? And it's 10 o'clock. Make sure it indexes at the right Friday, the third Friday. There it is. If it's at 31, you go the next highest strike price. Okay? because it's a put you're looking at. So you go to 32. Now, is that 10 or above? You remember our training? Is this number right here 10 or above? Yes or no? That's what I'm going, Patsy. No, it is not. Which means when I click on this, it's going to be flat, which means you don't take the position. Once again, our answer is Wealth Institute strategy, 100% accurate. Watch this. Our drill down, 100% accurate. Watch this. I hate when it does that. Hold on. Let me try to fool it. Watch me now. I'm back here. I want to go to options. It's at 31. I want to be at 32. When you're doing a put, you go to next highest strike price. Make sure it indexes off the right Friday. It has. I come down. I want to be at 32. There it is. Watch this. Okay? Now, if the volume, look, this is not the right, today it's not 228. It's 10:02. Their platform is behind. Okay? They're not giving me the chart, nor are they giving me the accurate read. Somebody, one of my elders, go to your trading platform. I need the EWU October 2019 $32 put. I need the volume, the open interest, and I need the spread, the day's range. One of my elders do that for me real quick, please. All right, because I want to prove to you a point that when that volume number is 10 or less, this day's range will be flat. And when the day's range is flat, you can't make any money. Okay? And Queen Patsy says on her platform, the volume is at 4. So there's no way you're going to have range here. You've got to have differential to create arbitrage off margin to get paid. So Queen Patsy or one of my other elders, give me the day's range. Okay? The call is $32 put. $32 put. Okay? Because I want to show you this, not just tell you. And I apologize for Yahoo Finance not having the charts up to date. That's crazy. Multi-million-dollar website, and they're lagging like that. See, it's not 228. Okay? But do you see all of the components of our drill down are super accurate. So when I come out here and I look at the overall position, I see, yep, I see everything. See, okay, Queen Patsy said, volume on 32 put is 0 and 51 OI for 10/18 expiration date. I don't know what 51 OI means, Queen Patsy. Send that back to me. But while she's doing that and others are pulling it to confirm what I'm saying, once again, open interest. Okay, great. Open interest. Okay, you had it. All right. Okay, great. So there's no movement on the position, just like I said. Can't be. But you see how this right here? If I see this at 4:30 in the morning, if I see this right here, then I know this got to be down when it opens up. And therefore, I know, okay, I got to do a drill down for a put. But that put has to be 0.50 for me to be able to make money on it. Hundreds of millions of traders around the world will come and see that this is red and immediately go in and take a put and lose their behinds, okay, because they're thinking, well, let's give them the benefit of the doubt. Let's say they know about water table. So they're going to be Billy Badass. Okay, you're welcome, Queen Patsy. Honor the service. They're going to be Billy Badass, and they say, okay, well, if it's at 0.20% to the downside, just move to 2.5. So you're watching the real time, 10:05, and the time is 10:05 Eastern Standard Time. And water table is our friend. Let's say they know a little bit about water table. I'm going to go ahead and take that $32 put now, because what I think when it goes to water table, it's going to fall down even further, closer to 0.50%. Look, don't get cute like that. Is it is or is it ain't 0.50? We move when it hits 0.50, not in anticipation of it getting closer to 0.50. Now you jump out there and you try to take it because it's at 0.25%, anticipating it getting to 0.50 or close to it inside the water table. And guess what? You're going to be just like Anthony Stone sent across earlier. You're still going to be in a position with not enough arbitrage off margin to create profit. There's not going to be enough spread there. So now guess who's going to get paid? The broker. Because you got to pay to buy the open and you got to pay to sell the close. And after you back after brokerage fees, now you got a negative net. 0.50, beloved, 0.50. We clear on this? Because it gets real tempting to take shortcut and bend rules and whatnot. No, don't do it. Any questions on this now? All right. Now there's another set of reports that are being released today. Hold on. Oh man. Yep, this is a lot of fun. All right. What else came out 7 o'clock this morning? Now watch what I do now. I'm going to show you again. Real time. Then we tell you about this going to come out in a moment. All right. Now, let's see what it said 2.5 hours before the market opened. It came out at 7. Watch this now. Real time. Is this number higher or lower than this number? Yes or no? Okay. This number is lower than this number. Is this number higher or lower than this number? This number, negative, is substantially lower than this number. Is this number higher or lower than this number? It's lower. Thank you. It came out at 7 o'clock. Now you're going to give me the answers to the test 2.5 hours before you give me the test? Meaning I get these numbers 2.5 hours before the market opens at 9:30. Please listen to me and look at what I'm about to show you. I need you to see this. Now, when I go to our two positions, ITB and XHB, they will be down because these numbers are lower than the prior numbers. Watch. ITB, real time. Watch. Hold on. Watch. Now, hold on. I want to show you something. You see it up. Watch this. There's no way it could have opened up. That's why you wait for the first 10 minutes. Oh, to where I want to go. Where did it start out? Look now. I cannot fake this. Give me my chart. You see where it started first thing in the morning, 9:32. What did it do? Fall. Now listen. This is proof positive why you wait for the first 10 minutes to let the damn position settle. It failed. And then by 10 a.m., miraculously, that 30 minutes, see why I say wait, don't jump. What did it do? You got to get this. See, look, you come out, you see All right, it got to open up down. But just because of that, you don't be Billy Badass and say, so since I see this, okay, at 7 a.m., I'm going to go ahead. There you go, King Mike. I'm going to go ahead and I'm going to go ahead and open up and take me a call option as soon as the market opens. I'm going to go, excuse me, I'm going to go ahead and take a put option as soon as the market opens. Because see, these numbers are lower. No, that's why you got to exercise prudence and patience. You don't trust nobody in this market. You wait that 30 minutes and look what happened. The first thing when it opened up, it went what? Damn. So you think, oh, I took a put option. Yep, I'm in there, but you didn't wait the damn 30 minutes you're supposed to wait. And guess what? They got you. Because in the first 30 minutes, they did this. Watch. There you go, Queen Patsy. Don't be hard-headed. Now, next up is that 0.50. That 0.59, but is that 0.50? No. Be still. And in the meantime, in between time, let's go to ITB's cousin, XHB, and look, bam. It did the same damn thing. You see, didn't I tell you they move in unison? 9:30, went straight down. You jumped out there, Billy Badass, and didn't wait the 30 minutes, you would have took a put. And guess what? Don't the charts look similar? And aren't they moving in lockstep, like I said? Now, is that 0.50? No. Be still. When and if it hits 0.50, you know what to do. But do you realize and understand and understand? I couldn't have planned this. You're looking at this real time. Do you see all of the components of our drill down and strategies? They work in unison. When you see the economic calendar report here, and it gives you an indication that the position is indeed going to open up down like it did here. Okay, our drill down is 100% accurate. But our training also tells us, be that as it may, you wait 30 minutes and let the market settle. Therefore, you don't get caught up in this and lose. So if you are obedient to our strategy and techniques, you would have waited and you would have said, oh my Lord, thank you, ancestors and the creator. Because I trained with the Wealth Institute, I know, wait that 30-minute settlement time frame, and this would happen. And because you train with us, you also know, okay, while it may be tempting to go ahead and get it now, wait a minute. My drill down tells me that's not 0.50. Discipline is very important. Come back out here to ITB, look at, burn that chart in your mind. See how that look? Watch how this one look. They work in tandem. Now, this one has broken 0.52. Now check it, check it. Of the two, which one is our first choice? ITB or XHB? Oh boy, we having fun right here. Look at him, look at him. All right, ITB. Now, what strategy should you be thinking of right now? This damn thing done broke 0.50. Where should you be thinking? There you go, Shinobi. There you go, my queen. Where should your mind go? There you go, Anthony. There you go, Devon. There you go, Green and Sonoma. There you go. Now, the next thing you thinking, holding strategy. Because you know, watch me now. Those of you just recently joined the family, watch how we move. When I go to these first two positions that are the most heavily held positions in the holding portion of ITB, both of them going to be positive. Watch this. Real time. Kick out. Come to holdings. About to take it to their behinds. All right? DHI, LNE. Top two most heavily weighted positions. DHI got to be up. Why? Because this is up. The macro is up. Watch how I do it to it. Right? Watch me now. Oh. Boom. Okay? Then I'm going to kick back. And I'm going to check that LEN, the second most heavily weighted. It got to be up. Watch me, watch me, watch me. Boom. Now, out of the positions, which one is pulling the macro position up the most? It's LEN. It's 1.05. Oh man, this is wonderful to show you this stuff real time. Check it. DHI ain't pulling it. It's LEN. DHI is only up 0.11. So LEN, Lennar is pulling the position. That's why when we go and we look at ITB, ITB is up more than 0.50. So if you're going to take the position, would you come in and on the holding side, would you take DHI or LEN? Oh man, we cooking with grease today. LEN. Do you hear me? Call option. Get the water table time. Tighten that call option up. Get on the backside of water time. Water table. Monetize this damn position. You paid by 4 o'clock. You kick back. It's 0.60. You take this, okay, and it's rocking. 0.61. You cooking with grease. You kick back, and you see the macro position is being pulled by Lennar. So I'm going to take this position. Call option. Trailer stop tighten at 11:15. I'm about to get paid 2 times before 4 o'clock. Game, set, match. Done and done. Who doesn't understand this? Tell me you kings and queens can't get PAID and become wealthy trading and investing. This is done all day, every day. King Gerald, you got this? King Kermit, you got it? King Elder Kevin Rice, you got it? Maggie Robinson, do you have it? Phyllis Smith, do you have it? Terrell Hicks, do you have it? Thurman Smith, do you have it? We're talking about getting liberated, family. We got to get paid. Christopher White, do you have it? Claudetta, do you have this? The only next damn thing I can do is come do the trades for you. We're showing you. That's right. You take October the 18th, your third. You take, you could go ahead and sneak and take the 13th. I mean the 18th, because we're right on it. We're gonna be in and out anyway. So this is one of the exceptions. Thank you, King Taylor. I'm so happy. Look, family. Don't make arithmetic trigonometry. You guys are hardwired for genius. Look and see. You don't see this? I can't predict this. I can't make this up. All I can do is show you the path. I can show you the light. You got to come on in here. And it doesn't take a lot of money, as you see. And the thing that should fill your heart with joy is the following. Family, you can do this every single week. And we don't care whether or not the position is a call or put. I don't care. I still get paid. If that market is open and they trading, they're going to pay me. And notice, I ain't asking, I go take it with the strategy and technique. You could do the same thing. Now it's up to 0.67. And check this. It's 0.68. Now watch this. Watch this. And when you look at Lennar, watch Lennar be going up. Watch it now, real time. Bam! 0.12. Better. How did I know that before I even clicked on it? You got a mortgage, you got a house note, you got student loans, you got any kind of debt. This stuff will eradicate it overnight. Just do it. Stay consistent. Hit them every day. Sunday, be waiting on Monday for the markets to open. Friday, be waiting on Monday for the markets to open. and use this right here. This. And every Monday when we come to virtual trading room, we're going to line them up and we're going to knock their asses down. Any questions on this? Because we ain't finished yet. Now, I got another one now. Today, I told Wednesday, today's a payday like a month. Next up, retail sales. I'm going to do the exact same thing because I can show you better than I can tell you. Now watch this. Retail, it came out an hour before the market opened. So you're going to give me the answers to this test 1 hour before you give it to me. Market opens at 9:30, and I'm seeing the retail sales numbers at 8:30. Okay, yeah, I take that all day, every day. All right. So this is what you do. Watch this. Watch now. Look. Is that number higher or lower than the consensus range and the prior number? Lower. Is this number higher or lower than the consensus range and the prior number? Okay, is this number higher or lower than the consensus range and the prior number? Is this number higher or lower than the consensus range but they ain't giving the prior number here. So they're all lower, right? Does everybody see that now? All lower, right? Okay. Now, what position do we have for our retail sales numbers? XRT. Now keep in mind, everything we're going over and our 30-minute wait period and everything else. Now watch, when I click on XRT, right? Look what happened right here at 9:30. Went up, came down. You wait. Even though this told us this, we wait. What did it do? Now, this is a classic example. What you're looking at on the screen right here, listen to me because I'm about to rock your world now. What you see right here is market manipulation at its worst. Listen to me. You see the damn numbers come out below, they're lower. But retail traders and investors, the hundreds of millions of them, are so damn gullible. They act and behave in a herd mentality. Anything the institutional investors put out there, irrespective of the damn numbers and the empirical evidence here, they will go ahead and buy up. And look, if the numbers are down, why did they go ahead and bite the bait? Notice what they did. They gave, what is this? This is called a head fake. One of our elders in Alabama, Joe Lewis, always talked about it. See what they gave the head fake right there? They bought into the market. Everybody jumped on it. They sold off. Then what they did it again, and everybody, all the knuckleheads, bought it back up. Then what the hell they do? Within the first 16 minutes of the market's open, see right there, 9:46, what they do? You suckers. All this is their arbitrage. They got paid. Then they head fake again, and them damn stupid retail traders, the herd, bought it back up, and it sold back off. Now, the question you need to be asked, well, wait a minute now. The market ain't even been open an hour. It's 10:24. What the hell happened in the retail sector to make the retail market go up and go down in less than an hour while the market opened? Not a damn thing. That's speculation. That's how stupid most traders and investors are. They go for they get in line, drink the Kool-Aid, and ask for more. And all the while, they making people like you, me, we the Ashwood Wall Street family who know about the speculation and know how to monetize, they make us money. See, ignorance is very expensive. You get out here trading and investing and you ignorant, oh, you're going to make somebody else wealthy. This is a classic example. If the empirical numbers are down, why, pray tell, should a position move up? That's ass backwards. The position moves up because people are stupid and ignorant. They don't pay attention. So anything anybody tells them or puts into the market, they buy it up. They rather follow than lead. So whatever the leader says, do. Jim Jones style, drink this Kool-Aid. Morpheus style on the what's the name of that movie with Keanu Reeves? Matrix. Red pill, blue pill. I gotta take one. No. This is why we train like institutional investors. Okay? Because we know their tricks. That's why I don't give a darn what discipline you got to employ. Whether or not you need to chew some chewing gum, bite a pencil, bite your finger, whatever. Tie your hands behind your back, but don't you take no position before the first 30 minutes. Let the games be played and the market settle first. Because if you took a call option down here, after you saw it run up a little bit, guess what happened? They ate your damn lunch right here. Does anybody not understand, understand what I'm showing you? And check this. This is the sister position. Look at this chart. If it pulls up, come on, Yahoo Finance. It ain't pulling up. Hold on. These positions tend to move in tandem. Okay, for some reason, the chart's not coming up. Does anybody not understand and understand what I'm showing you? We train on this. You got reference documents and hours upon hours of me lecturing about this on the back end. All giving you proof positive of this is how the markets work. Now, I'm going to say something here for all of you zealot, okay, analysts, okay? Now, I'm not saying analyzation, all right, is, okay, somebody just said, Christopher White said, Lennar, which we just looked at, it is up more than 6% already. Wunderbar. We just looked at it. Okay, thank you, King Christopher. More pop, more proof of what we're saying. It works. Look at that thing. Look at that thing. Look at that thing. Okay. 52-week high. See right there today. If you ain't getting paid from it, who fault is it? 52-week high today, baby. Having fun yet? I can show you better than I can tell you how to become wealthy trading and investing. But the point that I was about to make also was this, fam. All right. You can bog yourself down with stochastics, MACDs, Bollinger Ranges, Head and Shoulders, Straddle, all of that. Did you hear me mention any of that on Monday? To get us paid Tuesday. To get us paid right now, like Christopher's showing us, with this moving and hitting a 52-week high today. So now you major on that stuff if you want to, but you'd be doing like my grandmother used to say, Lily S. Brown, peace and blessing be upon her. You're majoring on the minor. Next time you look at Bloomberg and CNBC, I want you to really look and see and hear and listen. And when you get finished watching that, especially when they go with charts and all this and talking about, you know, the Bollinger and the, you know, the Condor and this and these straddle strategies and all that, you need to ask yourself, now look, how in the hell that gonna get me paid? So you need to look at that versus what you're looking at today. Because we do this real time. Real time. Anybody can tell you something after the fact and be 100% accurate. But who can tell you beforehand and then show you while it's happening and say, didn't we go over it? Yeah, right. That's why you in this Wealth Institute, and if it ever occurs a time where we can't show you stuff like this real time, then you need to cancel your membership. But while we're doing this and you getting this, get it all. Have an insatiable appetite. Okay? If there's a gray area, fire a question across. You got to know this. Okay? Because this ain't monopoly money. And the ancestors and the creator, they will tap into your intent to be more than an adequate steward of the money that they're giving you and watch your profits soar. You can't be fooled. You won't be able to be bamboozled. So when you see something like this, and then you see this position hit a 52-week high today, and we talked about and showed you how to implement the holding strategy on Monday, you're going to be like, I expect that. Now, oh, hallelujah, it hit a 52-week high. No, you'd be like, calm and reserved. I expected that. Because I did my homework and I passed the damn test. Next, I can't wait till Wednesday to get in. Because I'm going to beat the brakes off their behind Wednesday. Off of the economic calendar report and the reports of the release. Okay, on Thursday. Are we clear on this? Now, Jillian, thank you, Jillian. Appreciate you, Queen. She said, what about the volume? Check it. Watch me, Queen Jillian. That volume is low, but check it. Am I buying this position straight up? Oh, thank you, Queen Jillian. Am I buying this position straight up? Or am I taking the option? So if I'm taking the option, I'm concerned about the option volume. Thank you, Queen, for asking this darn question. So here we go, Queen Jillian. You and I. Come on, help me teach this class here. All right, so it's at 59. We kick it down. We come over. We know to take the $59 call. Indexing off the third Friday. Watch me now. Move it. I come down. They don't give me a 59, they give me a 57, right? It's already up 29.55% from when Queen Jillian would have looked at it, okay? So she would have come in and the position, when it dipped initially, she'd have got it at 225. Right now, that position at 285, she got a 29% profit. And the day ain't even over with yet. Hell, the market just been opened up an hour and 4 minutes. She gets close to water table time with this call option. What's she gonna do with that trailing stop? Talk to me, Queen Jillian. What you gonna do with that trailing stop when you get to close to left? What you gonna do? Where's my queen? There she is. She gonna tighten the damn thing because she ain't giving that money back. Get on the backside of the water table if that volume was still there on this. Okay, that volume, Queen Jillian, above 10, ain't it? It's 33. That damn thing gonna move. She gonna lay in the cut when she get close to 4 o'clock. Sell that damn thing. I'm out of there. PAID. All hail the queen, Queen Jillian Olive. Y'all get this? Real time you're looking at. Thank you, Queen Jillian. That's how we rock and roll. And then Queen Kim Fodor said, thank you, Queen Jillian, for that. That's how you do it. Okay? Then check it out. One of the family members just sent across to me that watch it now, I got something to show you. ITB. Oh, what a, oh man, this is a wonderful day. They tell me it just hit a 52-week high. Let me confirm. Bam, 52-week high today. Booyah. Did we hit or did we hit? Damn, a lottery ticket. There you go, Mike. P-A-I-D. Right there. Look. Days range, 52-week high range. Once again, volume ain't there. I don't give a rat's behind. Why? Because I'm coming over here. I'm on the option. Going back to Queen Jillian's situation. Okay? Woo, woo, woo. Watch this. Get right here. It's at 40. Right? Opened up at 44, which means I got to be coming in here. Lord, boy, life is wonderful. 33% profit. Market ain't even been over 2%, 2 hours. Watch me. I can show you better than I can tell you. Took it down at 31. It went up to 40. Where's it sitting at? 40. What? 33% profit. And I'm not even finished with the trading day. Trading day ain't even been open 2 hours. Been open an hour and 6 minutes. Please look and see. Hear and listen. And get PAID. Does anybody not understand and understand what I'm showing you? Okay? No, Dart, don't get out there to November. These are unique circumstances. Come in tight with October 18th. King Art Goza, thank you for answering the question. He said, would I be wrong going off the 3rd Friday of November? Although we know, I can't read the rest of this. Although we know I can't read the rest of it, but the answer is yes, you would be wrong. Because of the circumstances at hand, you want to come in tight. Okay, with this Friday, the 18th. Great question, my brother. There you go, King. This is wonderful. Now you tell me why you can't become wealthy. I ain't talking about being rich. I'm telling you about being rich. You tell me why you can't do this any day the market's open. Okay? There you go, Mike. There you go. Now, King Al. Now, King Al Henderson, one of our elders, been in the Wealth Institute well over 10 years. He asked the question, when should we consider a put? When they come to get their money? No. Because King Al, remember now, this is an intraday play. So we're going to go ahead and run it with our initial option position, and we out by 4. You don't want, now tomorrow, if it's down 50, 0.50 point, and then we rock their behinds with a put, but we're not going to do a put in the call intraday. Oh boy, I'm glad you asked that question. Okay, yeah, there you go, King. Now, come on, give me some more questions. If you don't understand and understand what you just bear witness to, you need to go ahead and ask your questions, because the answer may equate to you getting PAID. And that's the reason why we trade and invest. Man, this is wonderful. There's no way any of us could have planned what we're seeing now. This is nothing but the ancestors of the Creator, giving you proof positive as to how to get paid. Okay? No art. Just like I told King Henderson. Okay? When you are in an intraday, let me make this real clear here too. When you are in an intraday position, okay? Okay, there you go, King Al. When you are in an intraday position, it's highly unlikely, I dare say almost a 100% improbability, although you say nothing's 100%, but it's very, very, very unlikely that you're going to take a call and a put in the same day on an intraday play. Thank you, King Art. It's an honor to serve you. That's very, very, very unlikely. Now, nothing is 100%. I know that. But see, this ties back to what I've been saying to you for years. And I'll always say, look, when you're trading on a position, now you got to come up to the upper chakra level to get what I'm about to say. When you're trading on a position, you ain't trading the position. We're not actually trading the ITB October 2019 $44 call. Now, I hope I don't get you all confused, but you got to get what I'm saying. You are trading on the damn people who are trading the ITB October 2019 $44 call. There you go, Patsy. That's one of my elders confirming it. Do you get that? You are playing the players, not the play. There you go, Patsy. You got to get, there you go, Queen Taylor, and listen to my queens. They're teaching the class, the virtual trader room. Queen Taylor says you're monetizing their behavior. There you go, King Anthony. You're monetizing their human behavior. Because as they trade, that volume is what generates the revenue income from you. So many people get it, gluteus maximus, backwards. They think they're trading the stock or the ETF or the position, the bond. But no, you're not. And I'm telling you, if more people would understand and understand that, more people will become wealthy trading and investing. You see, let me give you a crazy example. People who bet on sports. So say you want to bet on Sunday's football games. Are you betting on the game football, or are you betting on the two teams that are playing the game? Oh, that's a good example. Praise be to the ancestors and creator for giving me that to y'all, so I can give it to you. Think about it now. If you want to bet on the football games this Sunday, are you betting on the game football or the two teams out there on the field? There you go, Devon. Boy, that's a good, easy street example for you. You are betting on the teams and the players on the teams. So when we trade and investing, we ain't betting on the game, ITB. We bet on the players on the field who are trading ITB. That's a good way to understand and understand that. Y'all got that? Now it's up 60. Look, see this go up? That thing, look at that. Look at that thing. Now it's up to 50. Now it's up to 66%. Up from 33. You see that real time? Did you all see that? That ain't no optical illusion. That's real money. Family members, rejoice in knowing that you can do this anytime you want to do this. Let not your heart be troubled. And guess what? We ain't finished with the week. Let's go back. We got some more money to get lined up and get. Okay? That brings us through today. Let's rock and roll and move over here to Thursday. Now on Thursday, okay, pretty quiet. But you see, they put that EIA petroleum report in here. So that'll be our oil-related positions. Okay? And here we are. Pretty quiet, pretty quiet. Come over here, Friday. Right here, China retail sales. You might want to look at that FXI. You might want to look at that. Huge rig count, going to move in lockstep with the petroleum report. Okay? We clear on that? You're right, King Crystal. Any questions on this? Fam, this is going to be a wonderful balance of the week. If you haven't gotten paid up to this point, whose fault is that? We show you, we do it, then we show you how we did it. And my elders, stepping up strong, helping teach these virtual trading rooms, showing you how we act and confirming how we actually do it. Now, if it is the will of the ancestors and the creator, guess what? Tomorrow gonna get here on time. And if it's the will of the ancestors and the creator, next Monday gonna get here on time with the whole week laid out on another economic calendar report. There is no excuse why you should be sitting there waiting for somebody to get you, to pay you every 2 weeks or once a month based upon what you do on their job, AKA plantation. When you know how to do this. When you can go and make money any time of day or week that you want. And never ever have your risk equal to your exposure. That's a wonderful thing. That's an excellent feeling of empowerment. And the beautiful thing about our strategy and techniques is if the positions fall, we don't care. If the economic reports come out negative, we don't care. We know exactly what to do to monetize them from the downside. Bull bear, we don't care. We just don't care. I'll tell you something that happened yesterday, in fact. See, this is when you have what the Jews call shalom, when you know how to make money no matter what, you act a certain way. And when you ain't figured it out yet, every month you end up having more money than more month than money at the end of every month, and you ain't figured out how to get paid in this capitalistic system, okay? And you just barely surviving, and you can't even fathom thriving in the system, you act another way. Yesterday, okay? I happened to be around a very, very, very wealthy Jewish man. He offered for me to go to a late lunch with him. So I met with him a little bit after 2 p.m. at the country club where he lives. All right? And we were sitting there. And he, believe it or not, he has to be in his 80s. Because I remember I was invited to his birthday 3 years ago, and that was his 80th birthday. So 3 or 4 years. So he's about 83 or 84 years old. And he has a cell phone, okay? And he has his stock picks programmed into his cell phone. So the phone was going off, okay? And it was giving them call cell signals. And every once in a while, you know, during our lunch, you know, we were talking about economic indicators and some other things that, you know, some investments that he's talking about, you know, perhaps getting involved with, and wanted to know if I wanted to be involved, okay? And he would go ahead and adjust his trades and et cetera, et cetera. So he's getting paid while we were sitting there, and he was having his meal and I was having mine. And he was at complete peace. This man, I believe if somebody rolled through that country club restaurant with an 18-wheeler, he would probably blink his eyes. He's completely at peace, no worries. And his energy was completely somber. Okay? Now, I learned from the Jews a long time ago, you don't put all your money in the market. You have what is called market money. Listen to me now, because you may want to do this as well. You have what is called market money, and you have what is called street money. Now, you need to make sure a percentage of all of your investable money is in street money. And you have whatever amount you so desire, a percentage of your money in market money. Now, market money is what you see us do today. Okay, popping and shaking, moving and doing all this kind of stuff. All right. Street money is just like you a mafioso. Okay, you a godfather. You got a certain amount of money that you got on the street. Now it could be $100 or $1,000 or $100,000, but it's a percentage of your overall portfolio. So when you look at my portfolio, I have market money. Then that market money is divided up into various sectors: real estate, tech, pharmaceuticals, cyclicals, et cetera, dividend paying positions, et cetera. That makes my whole portfolio. Then a portion of that money, I take my profits from and I put it in the street money. Okay. Now, all my street money makes their payments to my runners on the 15th of the month. And the reason I do that is because most people who I end up loaning my street money to, they work on somebody's plantation, AKA job. Listen to me now, I'm going somewhere with this. You can do this too now. Now I charge outside gains, AKA percentage, for my street money because I ain't no damn bank. If you can get the money somewhere else, you need to go to the bank. All right? But if the word gets to me from the street, and after you go through my filters, I've got 3 layers of people that you go through before you get my money. And each one, they give you a test. Now, the people don't know they're going through a test, but you got to cross them burning sands before I give you a loan from this money that the ancestors and the creator have given me stewardship over, which comes out of my portfolio money, money that has generated money for me. So if you're on the west side of Atlanta and you want to open up a store, or you got a store and you don't run into financial hardship, the word gets out on the street. Now, if it makes it through my people, okay, my filters, my people at the end of every month, the last week of every month, they present to me. I have Atlanta divided up into 4 quarters, or what we call 4 catchment areas. And they listen for people who need money in the street. Now, once they hear, because I don't give a damn what the economy is doing, somebody always needs some money. And I got it. I've been given stewardship over by the ancestors and the creator. So what happens is each one of the catchment area captains report to me the last week of the month and say, I got this many loan requests in my catchment area. I got this many, I got this many, I got this many. And so they present to me the due diligence that they've done on those people. Now I make a determination before the end of the month which ones I'm going to approve based upon my risk exposure relative to the rest of my portfolio. Because I know my portfolio is generating X. And I got trailing stops on everything. So I know my risk relative to my exposure. Listen to me, I'm about to tell you something now. Now my street money on the street, I got to make sure that once again, my risk is never equal to my exposure. So when my captains come to me and they've screened these people who need this money, they already know. So Dr. Reeves, this is the collateral they can put up. This is the length of time that they would like to borrow the money. And these are the terms they request. So based upon those things, and this is the amount they want to borrow. So based upon those terms, I determine whether or not the risk reward is palatable to me. If it's not, I'm not going to approve the loan. Now, listen to me now, I make the loan for those that I approve on the 1st of the month, the first 5 days of the month. Why do I do that? Because I'm looking at, it's called behavioral economics. I'm looking at how they're going to behave. See, whenever anybody borrows something from you, especially money, they ain't gonna never tell you the downside. They're gonna tell you the upside, what they expect to happen. Now, what people expect to happen and what actually happens oftentimes is two different things. I ain't expecting to get paid back with interest. That got to happen. So while I listen to what my captains say these people expect to happen, I discount that. I'm looking at what has happened, i.e., if they're working on somebody else's plantation, aka job, when do they get paid, Captain? Well, Dr. Reed, 99.9% of jobs pay when? The first of the month. Even if they're getting government subsidies checks, when them checks come, the first of the month. So when they tell me, well, Dr. Reed, they make their money or they get paid every 2 weeks, well, then that means when every 2 weeks, one of them damn 2 weeks, unless it's a 5-week month, which is very seldom, it's going to be the first of the month. Now, when a person has that payment from master on the plantation, although they need additional money that they want to borrow from me, they talk a lot of trash about what they can do. Because, see, they are artificially, they engage in what is Alan Greenspan calls artificial exuberance, because they got that paycheck from master. And it's the first of the month. So when my captain goes back to him and says, well, you need to sign these documents, this particular collateral, we'll have a lien against, your time frame is this, your interest rate is that, et cetera, because he has drank the payment from the plantation Kool-Aid at the beginning of the month, he don't look at nothing, he just signed. That's why people go out and finance cars for 84 months. How stupid can you damn be? And the car lose value as soon as you drive it off the lot. But you don't look at the downside. You're just looking at the upside. I'm not in the collection business. I look at the downside first. Goes back to our training, right? I know the end game before I get in the game with this person. Got it? So what I turn around and do is, I tell them, okay, then, for the loans I approve, go ahead and make the loan the first 5 days of the month. But check this. I want my payment on the 15th of the month. Now, if this person is true, he's going to make that first payment on time. If he is false, he gonna miss the first payment because it's the 15th. He already ran through the money he got on the first from master. If you're gonna default on me, I'd rather you default early rather than late. So I can deal with your ass quick, fast, in a hurry. See, if I make the payment due on the first, he gonna make a decision. You make a decision on every one of your bills. If you're behind on any bills, that's a conscious choice. You may have some money coming in that's trickling in, may not be enough to pay that bill, but you make a decision who you gonna pay and who you ain't gonna pay. But let me tell you something, if I loan you some money, you gonna pay me. Your decision gonna focus on me first, because I ain't in the collection business. You don't pay me, I'm coming to get whatever I got to get. Be it your collateral, put a lien on your bank account, I got access to do all of that. So understand and understand, if I approve you, you need to look everywhere else first. Because if you take this money that the ancestors and the creator gave me, stewardship over, oh, you're going to pay me. We got a loan default rate of 4%. That means 96% of all of my street money generates percentage profit for me that exceeds prime, and I dare say is double digits, 96%. Do y'all understand and understand what I just showed you and told you? How I implement what we teach you here with my portfolio investments that is applicable to street money. Now I got income streams coming in from I dare say multiple sources. That street money, a need, ain't never gonna dry up. And the point is this: I never let, whether or not it's my portfolio money or my street money, I never let my risk be equal to my exposure. Do you all get that? Notice the time of day, or time of month, I should say, I extend the loan versus the time of month I require the payment due. And the reason I do that is because if somebody's sincere about paying me back, they're going to put the money aside that they got to pay me on the 15th and not burn through it through the first 5 days of the month when they get their check from master. Y'all get that? Once again, what am I monetizing? I'm monetizing human behavior. When I go and speak, last month, I was asked to speak down at Bethune-Cookman College, okay, an HBCU. And I was speaking to the econ class. And everybody was talking about, well, you know, those that want to go to grad school with Dr. Reese, you know, should we take advanced stat and da-da-da-da, and what, you know we're going to have our core curriculum classes. And so what elective should we be taking, this, that, and the other? And I said, all y'all listen to me. Before you leave BCC, Bethune-Cookman College, now it's called Bethune-Cookman University, before you leave here, you need to make sure you take a course in psychology and sociology. If you want to go ahead and get an advanced degree in econ, do yourself a favor and take a course in psychology and sociology, because that's what you're going to be monetizing. You're going to learn a lot about quantitative stat, okay, cross-various analysis, all that stuff through grad school. Yeah, that's given. But it ain't going to mean a damn thing unless you understand the core concepts of psychology and sociology. That's what's going to get you to the point where you become wealthy trading and investing. Because trading and investing is the monetization of human behavior and the minimization of risk. As we sought to reiterate and prove to you once again today with today's Virtual Trader, where you've been seeing things real time. Any questions about anything, okay, that you've been exposed to today? Any questions about what you need to be doing the balance of this week to get paid from the economic calendar? Family, these are wonderful times. And whether or not there's a recession or depression or the market or the economy is bustling, they are all wonderful times. You can get paid continually. It doesn't make any difference. And like I said, my doctoral dissertation was on wealth generated during the Great Depression. Very few people know that the majority of wealth that extended through the next 40 years after the 1929 stock market crash was made because, listen to this, because of the crash, not after the crash, because of the crash. Now, a lot of people don't get that. I give a 3-hour lecture on it, and afterwards they're like, I see, because I give them all the evidence. Okay? 40 years afterwards. So the majority of the wealth that extended into 40 years after the 1929 stock market crash was made because of the crash. See, you had them old cats like Jesse Livermore and others who came out and was getting PAID by shorting the market. Okay? All right? This cat was ruthless with that thing. Look at some of his quote. There's nothing new in Wall Street. Nope. Buy rising stocks and sell falling stocks. Is that simple or what? Do not trade every day or every year. Trade only when the market is clearly bullish or bearish. Only enter the trade after the action of the market confirms your opinion, and then enter promptly. That's what that's saying is, don't enter a trade until you know your end game before you get in the game. All right? Do your drill down first. This man here made literally what is equivalent to billions of dollars in the market as the Great Depression and market cycles went down. You need to go ahead and print this out and read this right here. And let me tell you what happened. One of the things that I tell all of our Wealth Institute family members, I've been saying this for years. One thing you got to be concerned about when you make the kind of money that you can make, utilize our strategies and techniques, and you become wealthy, is you'll become obsessed with this thing. It will take over you. Okay? Because now you start to worship that demigod called money, instead of realizing that the money should be your tool and work for you. He began to worship the money. And so he would make hundreds of millions of dollars. Then he suffered from bipolar disorder. He would just get extremely zealous about trading and investing. And then he would forget what he did to make the money. And then he turned around and he'll lose the money. Read his autobiography. It's one of my recommended books on our recommended reading list. And then you know what happened? He went back and forth and back and forth and back and forth, making this money. I actually met his grandson. Okay? His grandson lives in Palm Beach, Florida. I actually met his grandson. And you know what this man did? He committed suicide. The acquisition of money just totally engulfed him. It consumed him. And he committed suicide. Now, his core concepts about trading and investing, dead on. Dead on. But see, his inner me, his I-N-N-E-R me, became his enemy, his E-N-E-M-Y, because he began to worship the money. Don't you do that, okay? Under any circumstances, all right? Money is a good servant, but it's a terrible master. Listen to me. You may want to write that down if you ain't heard it before. Money is a good servant, but it's a terrible master. And I run into people every day who make money their master. Don't you do it. You control your positions. You control how you go in and out of a position, like you saw us do today in the virtual trading room, and just get PAID crazy profits. And we talked about it on Monday. We got paid yesterday. We went over the profits for yesterday. We went over what you need to be doing to get paid today. Showed you real time. Double-digit profits in less than an hour and a half. And the market hasn't even been open 3 hours yet. And we're going to get paid closing out our position, the balance of today. Intraday trades. But we always understand and understand that you are given stewardship over, aka mastery over the money by the ancestor and the creator. You do not allow the money to master you, control you. Perspective. Keep everything in perspective, because the way you perceive something will be the way you act upon it. We clear on this? Okay. PAID alerts and WIS alerts. Be on standby for them as the market dictates. Understand and overstand, we don't care what the market does or does not do. We know how to get paid from it. Do not, like you saw today, shortcut any of our steps in our drill down. You wait 30 minutes. If you got to tie your hands behind your back, put on handcuffs, whatever, bite your tongue, chew on a pencil, do not go into the market before the first 30 minutes. Proof positive was given to you earlier today in the virtual trade room. And understand and overstand, never ever let your risk be equal to your exposure. Don't you ever take a position without that trailing stop upon you. And you adjust it accordingly as you come up to water table time, 11:15. Family members, like always, an honor to be with each and every one of you. Those of you that are elders that helped teach this virtual trading room today, thank you so much. And family members, understand and overstand that you've got to look and see the position and hear and listen. And we, your humble servants here at the Ashley Woods Wealth Institute, we do it because you, me, we, the beloved Ashley Woods Wealth Institute family, we are indeed family. And we earn and learn together as we make Wall Street pay us right here on Main Street. It's all done for the love of YOU, our beloved Ashley Woods Wealth Institute family. This Ashley Woods Wealth Institute virtual trading room is now dismissed. Get PAID as we do this for the love of you. Peace and